So, you've seen Bitcoin's price go on those wild rides, right? But have you ever stopped and wondered how you can actually, value it beyond just the hype and speculation? Well, today, we're unlocking a really powerful framework that lets us look right under the hood, using Bitcoin's very own data to understand its fundamentals. So, here's our game plan. We're going to start with the big problem: why traditional tools just don't work for Bitcoin. Then, we'll introduce this new on-chain framework and climb its 3 layers, starting from the very foundation, the network's health, and building our way all the way up to asset valuation. All right, let's just dive right in, shall we? Here's the elephant in the room for any traditional investor looking at Bitcoin. It has no earnings reports, no cash flow statements. So the immediate question is, how on earth are you supposed to analyze it fundamentally? I mean, for most folks on Wall Street, this is a total deal breaker. Without those familiar metrics, PE ratios, balance sheets, they argue that you simply can't do any real analysis. They say it's all just pure speculation. But what if they're missing something huge? This is where the story takes a really cool turn. The solution isn't buried in some secret report. It's right there, out in the open, for everyone to see. Bitcoin's own global ledger, the blockchain, is essentially a live, streaming financial statement for the entire world. And that brings us to this incredibly powerful new way of thinking, all based on something called on-chain data. So what is on-chain data? Well, just imagine if a government published all of its economic data, live, in real time. That's kind of what this is, but for a global decentralized network. It's a completely open book. Anyone can look at it anytime. Okay, so how do we possibly make sense of all this information? Well, it's actually structured in this super elegant 3-layer pyramid. We're going to start at the very bottom, the foundation, which is the network's health. Then we'll climb up a level to look at how people are behaving. And finally, we get to the top, where we use all that info to build some seriously powerful valuation tools. All right, let's start at the base of that pyramid, layer 1. This layer is all about answering one super simple question. Is this thing actually healthy and working the way it's supposed to? Think of this layer like a doctor's checkup, covering 3 vital signs. First up, monetary integrity. Is Bitcoin's famous fixed supply schedule actually holding up? We can check that. Second, security. How much firepower are miners actually using to protect the whole system? We can measure that. And third, usage. A simple one, are people actually using the network? Let's take hash rate, for example. You can literally think of it as the network's security budget, or maybe the size of its digital army. So when you see the hash rate going up, it means more and more computing power is being dedicated to guarding the network, making it incredibly expensive and difficult to attack. Okay, so we've established the network is healthy. The vital signs are good. Now we can climb up to layer 2 and look at something even cooler: the economic behavior of everyone on the network. This is pretty wild. Imagine if for, say, a huge company stock, you could see exactly when every single shareholder bought their shares, how many they bought, and what price they paid, all in real time. I mean, that would be a game changer, right? Well, that's exactly what Layer 2 gives us for Bitcoin. Now, one of the most powerful ideas here is a metric called realized capitalization. It's a really clever way to think about the network's value. Instead of just taking today's price, it values each and every coin based on the price when it last moved. To put it simply, it gives us the aggregate cost basis, basically the average price that everyone holding Bitcoin today actually paid for their coins. And here's why that is so important. When the current market price, the one you see on the news, drops below this realized price, it means the average Bitcoin holder is officially underwater. They're sitting on a loss. And that moment, well, that's usually when you see maximum panic, what we call capitulation. Historically, that has been an incredible signal for spotting major market bottoms. And then you've got this incredible metric called HODL Waves. It literally shows you what percentage of Bitcoin hasn't moved in a certain amount of time. And get this, even with all the insane price swings of 2021, the data showed that about half of all Bitcoin, hadn't budged in over 2 years. I mean, talk about a powerful picture of long-term conviction. Okay, you with me? We've got a healthy network from layer 1, and we understand how holders are behaving from layer 2. Now we can take those building blocks and climb to the very top of our pyramid, valuation. Layer 3 is really where the magic happens. We take everything we learned from the bottom 2 layers and use it to build these relative valuation models. Kind of like how a stock analyst would use an EV to EBITDA ratio to figure out if a stock is cheap or expensive. A perfect example of this is the MVRV ratio. It sounds complicated, but it's actually super simple. All it does is take the normal market cap and divide it by that realized cap we just talked about. That's it. It's just a ratio comparing the current market price to the average price everyone paid. And reading it is pretty intuitive. When the MVRV drops below 1, it means the average holder is at a loss. They're underwater. Historically, that's signaled that the asset is deeply undervalued. On the flip side, when the MVRV gets really, really high, it means holders are sitting on massive profits, and it might be a sign that the market is getting a bit frothy and is due for a cool down. So let's zoom out. What does this all mean? What's the big takeaway from looking at Bitcoin through this completely new lens? Well, this three-layer framework basically takes Bitcoin from being this mysterious, unanalyzable thing and turns it into one of the most radically transparent assets on the planet. Layer 1 is your basic, is it working? Fact sheet. Layer 2 reveals the conviction of long-term holders. And Layer 3 gives you these amazing signals to spot potential turning points in the market. And this really hammers the point home. This quote from ARK Invest says it perfectly. Bitcoin's integrity comes from its transparency. The fact that all this data is just out there for anyone to see. That's not a bug. It's the core feature that makes this whole new type of analysis even possible. And that really leaves us with a mind-bending question for the future, doesn't it? Think about it. We're shifting from a financial world based on quarterly reports that are already out of date the minute they're released to a world of live, real-time, completely auditable data. So the question isn't really if we can analyze assets like Bitcoin anymore. It's how this new level of transparency is going to completely change what fundamental analysis means for everything else.